Hi everyone and welcome to the Octa FX live trading session. My name is Ambrose Ebuka and you can go ahead and let me know your name in the comment section. So go ahead and let me know your name and where you're watching me from in the comment section. You can also go ahead to let me know if this is your first time, participating in an Octa FX live trading session or an Octa FX webinar. Welcome everyone. Let me know your name and where you're watching me from in the comments. In live trading sessions like this, you would learn different ways to analyze the market and also the news before you open a trade. We'd also look at some methods of opening and closing orders in real time. We'll talk about some steps that I use in trading the market that you can also employ in your trading activities and modify to suit your trading style. And we're also going to have a section where I answer your questions. So if you have questions, you can also, in the course of this session, go ahead and type in the comments. When we get to the question section, I'll just scroll through and answer your questions. And yeah, we'd also get to analyze pairs and identify areas where we can possibly take trades. Before we go ahead and kick off, you can share this link with your friends so that you can learn and earn together with your friends as well. Someone is saying the sound is not clear. Give me a second, guys. Let me know if you guys can hear me now. Let me know if it's audible now. Sound should be good. Okay, we have Rajiv from India, Bhavin from India, Madhu from Nigeria, Hope from Nigeria, Clayton from South Africa, Mustafa from Nigeria. Welcome, massive welcome to every one of you. Like I said, in live trading sessions like this, we analyze different pairs, and identify areas where we can possibly take trades. And if you have pairs that you'd want me to analyze, you can also let me know in the comments. All right, we'll just go over, some of the steps to taking trades. One thing about trading the Forex markets is that it's quite the process is not that much. You just come into the market and you have the opportunity to click buy or sell, right? But before clicking the buy or sell, to be very comfortable at the area where you're buying, or to be very confident at the area where you're buying or selling, there's actually a process to it, and it's called the framework, your trading framework. Okay, and this process can differ based on your strategy, your style, your trading style, but it's important to have that framework that gives you, the area where you should, or gives you that confidence to place your buy and sell trades. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or links to this presentation are provided as general market commentary and do not constitute investment advice. So what are the steps in trading? What is included in this framework? There are a couple of things, I think 6, right? 6 steps. First, you want to check the news. And it's very important you check the news because these currencies that you trade are moved by economic events mostly. And they're also moved by, the strength of the economy. So if the economy is great, then it's going to have a positive impact on the domestic currency of that country. But if it's not great, then it's also going to have a negative impact on that on the domestic currency of that country. So let's say, for example, a news is about to be released today on the interest rate, and then they're about to start increasing the interest rate. The central bank is going to increase the interest rate. This is actually a very positive news for the domestic currency, right? If it's the US that are increasing interest rate, because we have central banks in different countries. So if it's the US, then we're going to expect the dollar to increase in value, right? That's for economic events. Now, if you look at the inflation over time and you see that the inflation is actually increasing, then that's not good for a country, right? It's going to have a long-term impact, negative impact on the domestic currency. And that's why you see when the inflation rate is increasing, they start increasing the interest rate as well, to try and fight this inflation. So it's correlated. The economic situation or condition of a country is also connected to the domestic currency of that country. And that's why it's important to check the news. And you also want to understand market structure, right? And by understanding market structure, we're talking about coming to the market and not just clicking buy and sell, or coming to the market and not getting confused by what you see. And this is very important for beginner traders. Sometimes when you come into the market, there are a lot of candles and a lot of numbers or figures, and you get confused. Market structure helps you understand and define the current market condition. This would give you buying or selling opportunities, so you don't come into the market and you're overwhelmed by the information you're seeing. You can identify market structure with the candlestick chart, which is mostly used by traders. You can also identify market structure with chart patterns, trends, ranges, supply, and demand. Now, it's important to pay attention to this, because when I go over the analysis, when I start analyzing pairs, would actually put this into play, or put this framework into play. So when you understand this now, it's going to be a bit, it won't be difficult for you to understand the analysis I'll be making on different pairs. Okay, so get this, you can write it down in your notes, but just make sure you understand the steps that we're taking to execute our trade. So the first one is to check the news and then understand market structure. What's the market telling you? You should be able to perceive the market. And once you understand what the market is telling you, you want to be able to identify your key levels. The reason for identifying key levels is because the market tends to move like a magnet. Areas where the market has, or prices where the market has touched in the past, the market would most likely make a retest at those prices, right? So you want to use your trend lines, your moving average, your Fibonacci indicator, support and resistance levels to identify these areas where the market would potentially make a retest in the future or break out of to show momentum in the initial direction of the market. So you want to understand first what's going on economically. You want to understand what's happening in the market. Is this an uptrend? Is this a downtrend? What is the market showing me? What pattern is it showing me? Is this Hey guys, let me know if you guys can hear me and see me. Apologies guys, I think I ran into some technical issues, but just to be sure that that's fixed right now, let me know in the comments if you guys can hear me or see me. Okay. Sorry about that, guys. I think I ran into some technical issues, but I fixed that. Okay, let's proceed. So, key levels, right? Very important that you identify the key levels on your chart or on the asset that you want to trade, because like I said, if you look at the market or you understand the direction of the market, you understand, oh, this market is actually showing me some continuation patterns, or this market is ranging, it's consolidating. You want to actually identify the areas where the market could potentially make retest. And that's where your key levels come in. That's where the support and resistance comes in. That's where your trend line comes in, because the trend line can also serve as support and resistance on your areas where you can buy or sell. Sure you guys can hear me. Someone is saying they can't hear me. Actually, retracement tool, support and resistance. And like I said, guys, very important that you grab this right now, because I would employ this framework into my analysis. And if you want to get and understand the analysis properly, then you should understand the framework that we're using, and you should pay attention to this, right? So you've gotten market structure, you've gotten your key levels, and now you want to identify the area where you should enter the trade, right? Very important, because you don't want to come into the market and just click buy or sell blindly. Okay, you want to build up that confidence, understand what's going on economically, understand the market structure, identify your key levels. Now it's time to look for entries. And in order to find higher probability entries, candlestick momentum comes in, moving average comes in as an added confluence. So by candlestick momentum, you're looking at what the candlesticks are telling you, right? And that's why candlestick charts are popularly used, because they give you information, detailed information on the open, the high, the low, and the close of price at a specific time. So you want to look at the momentum of this candlestick to say, okay, are buyers building up here? Are we seeing buying pressure here? Are we seeing selling pressure here? The moving average can also be an added confluence where you trade either the bounce or the break of the moving average. And obviously, with a trade, you want to identify areas where you exit that trade. That's where the swing highs and swing low comes in, the high and the lows, the higher highs and the lower lows. That's what we mean by swing high and swing lows. And then you also want to pay attention to candlestick lows and candlestick highs. And this is very important for people that trade the lower time frame. So if you're trading like the 5 minutes or the 1 minute, then you would most likely pay attention to the candlestick lows, previous candlestick lows and previous candlestick highs for your stop loss or for your exits, and take profit as well. And your orders, and these are automatic orders that you give to your broker to help you exit the trade, even if you're not online. So the stop loss is going to stop your trade if the market is moving against you, and you just halt or stop against your initial trade. So for example, if you place a buy and the market is moving downwards, then you wouldn't be making profit from that trade. So the stop loss is a price where you set and an order that you give to your broker to close the trade if the market moves against you. And the take profit helps you secure a certain amount of money or a certain amount of profit if the market is moving in your direction. Remember, the market is not going to move in one direction forever. There will be retracements, there will be reversals. So with the take profit, you've secured a certain amount of profit from that trade. And you can also use the ATR indicator to identify how many pips you want to use for your stop loss. We'll also go ahead and use that in the course of this live trading session. Any illustration? Yes, we're going to go over to the charts just after the framework. So the last thing on your framework should be your risk management strategy. And this is also very important, because your risk management strategy is going to keep you longer in the market than your trade execution strategy. So if you have a good and proper risk management strategy put in place, then this covers how much you want to risk on a trade and how much you want to make in reward on that trade. So if you're using a moderate risk to reward strategy, let's say you're risking 1% to get 1 or 2 or 3%, then that's moderate. But if you're going to be using 5% risk to get 1% reward, then that's not really moderate, because you're using 5 times your reward, right, as your risk. So that wouldn't keep you long enough in the market, right? And also, you want to use stop loss and take profit orders to help minimize the drawdowns on your trade and also secure your profit. I'm going to go ahead and go over to the charts. So if you have pairs you want me to analyze, you can let me know in the comments or in the chat, and I'll check to analyze them. But right now, we'll be looking at the dollar index. Give me a second, guys. I'm saying it's freezing. All right, so we're going to look at the dollar index because most of the major currency pairs in the market are currencies that are paired with the dollar index. We have the GBP USD, AUD USD, Euro USD. These are all major currencies, and you can see that they are paired with the dollar, right? So we're going over to the higher time frames to identify and understand market structure. Where is the market headed? Where is the market coming from? What trend are we looking at? And since July, the dollar index has been breaking all these major or these key levels here, breaking above, and we had this high that was created in May this year, and you can see that the dollar index went above that, made a retest, and continued to create higher highs and higher lows. This has given us the indication that the dollar index or the dollar is strong. I'm just going to go ahead and connect. Let's connect this. So you can see why it's important to actually use key levels when you're analyzing. Most of these horizontal lines that you see here are basically key levels, areas where the market created support or created resistance, and areas where the market could potentially make a retest. You can see here the market could not break above here, created an area for resistance here, and then the market came above 105 to make a retest at this previous resistance, right? And you can see that it has reacted to it and is beginning to pull back. Now, dollar is bullish, pretty much bullish, and we're still trading above the 104.50 levels. So it's safe to say that the dollar is going to be bullish as long as we trade above these levels. Let me just go to the lower time frame. Let's go to the 4-hour time frame. You can see that the dollar index has created a series of higher highs and higher lows, trending to the top side. I'm just going to take this off. So as long as we keep trading above 104.5 to, yeah, let me take this out. As long as we keep trading above this key level here, the dollar is pretty much bullish. If we get to break above the highs that were created in March, then that's also going to signify long-term bullish run for the dollar. So we'll be buying the dollar across major pairs. But also keep in mind that other pairs that are paired with the US dollar have a lot of economic events, you know, so it's not just looking at the dollar alone. You also have to look at what's going on in England. You have to look at what's going on in, you know, Japan, because we have pairs like GBP USD, USD JPY. So you don't want to just look at dollar alone and start trading based off of what the dollar is telling you. So for example, we had news released on the pound. We saw the Bank of England keep the interest rate at 5.25 basis points, and that's negative news for the pound, right? You can see that the pound is trending to the downside, and it has traded, or it has been on this downtrend since July. And I still expect the pound dollar to downwards, I think all the way down to 1.21 levels. Let me indicate that for you guys. So we've been on this downtrend since July. You can see that the market has created a resistance here using this trend line. You can see that the market is also trading below the 200 period moving average and is trending to the downside. We've broken a lot of key levels. I don't think I indicated this one. Let me just do that right now as well. Let's indicate this one. Yeah. So pound dollar still trending downwards. I expect more downside on the pound dollar, especially because of the decisions made by the Bank of England recently. So I still see further downside for the pound dollar, at least to 1.215 levels. Let me just type that out for you guys as well. I still see some people complaining about the freezing. Let me know if it's good now. So just a recap on the dollar, in case you guys didn't get that, on the dollar index. Load up the dollar index. All right, this took a while to load up. Yeah, like I said, as long as we keep trading above this level, we can still consider the dollar to be strong. If we get a break below 104.5, then the 103.95 levels will serve as support for the dollar, and we could start to brace up for some bearish move or for some declines on the dollar. Okay, so just going to change the color for this so you guys can, yeah. Pound dollar. Let me just indicate that as well, because this is also a key level on pound dollar. Yeah, so we could see rejections here and consolidations here. If we have a sustained break below this zone, then we're headed to 1.2150. So you can also take note of that as well. Let's look at AUD USD. Let me know in the comment, guys, if you guys have pairs you want me to analyze. We're going to look at AUD USD. So just a recap on the pound dollar. Like I said, we're still expecting more downside. We're still bearish on pound dollar. We could see some rejections around 1.230 levels, but if we break that, then we're headed to 1.2150, which is going to be a retest at this previous support and previous resistance as well. And we can also drag this back to these levels, but yeah, let's pay attention to most recent price action. So first we have to identify the key levels here. We can clearly see that the Aussie dollar has created support level here, which I have just identified, and we can also see resistance. So it's looking like the Aussie dollar is going to be trading in, or has been trading in, a range since last week. We're seeing the Aussie dollar trade in a range, and you know what happens when the market consolidates? There is always a breakout of a consolidation, or if you see the market moving an apex like this, what tool am I going to use for that now? Okay, let's use the trend line. So if you see the market move and dot something like this, moving an apex like this, or yeah, create patterns like triangle patterns, there's always a breakout. Out of every consolidation, out of every range, there is always a breakout. And it could be to the top side or it could be to the downside. But there's always a breakout of every consolidation. And that's what we're seeing right now on Aussie dollar, right? Aussie dollar is still trading below the 200 period moving average on the 4-hour time frame. We've had series of retests on support created here, resistance created here. We've had bounces of this support and resistance, and it has proven, or it has made this support and resistance to be very strong, very effective. So what we'll be observing on Aussie dollar is a breakout of either the resistance level or the support level. That's what we want to look out for. Considering the strength of the dollar, if we have a nice breakout to the downside, then we want to execute our trades at the retest. Okay? Because we'll still have this level. Let me just track that one as well. You still have support levels here where the market could potentially break out to make a retest before, changing its trajectory or reversing to the top side. So we're going to just pay attention to Aussie dollar because we're trading a range. If you trade consolidations or you trade ranging markets, then obviously what you'd want to do is to pay attention to how the market reacts to the support and resistance levels like you have here. So let's say looking at how the market has reacted to this level here, here, so you can see that whenever the market got to these resistance levels, there was a pullback to the downside. Whenever it got to the support level, there was a pullback to the top side, right? One of these levels are going to get, the market is going to make a retest at one of these levels again. And if you trade the range, then you should be observant at how the market reacts, or observant to how the market reacts at these key levels. And if you start to see bullish momentum kick in, then you can enter your trades. That's if you trade the range in market. I like to be patient enough for breakouts and retest, because then I can identify my stop loss levels and I'd have, more room to place my stop loss and also more confidence to trade the market to the direction of the breakout. Somebody's saying XAU USD. Okay, let's look at gold. Right, I already have some key levels on gold, so I'm just going to extend this. I already have some key levels mapped on gold. Now, gold recently made a retest at resistance level 1946, 1945, 1945 to 1950. And we're seeing the reaction. The market has pulled back and is trading at 1915 to 1925, right? We've had this reaction. We have the pullback to the downside and see if we can let's see. Gold is not really trending right now. But yeah, let's go to the lower time frames. I believe that you guys understand why it's important to have key levels in place, because we had these key levels set from August. We also had this key level set from August, and you can see how the market is making multiple retests at these key levels. Even this one up here, we had multiple retest has come to make a retest, and that's why it's important to have your key levels in place, because you'll be more confident to execute trades from a key level, just like you have this trend line and this one. You can see how many times market made a retest here. 1, 2, came to also retest, broke out, but couldn't sustain the break to the downside. And this is actually a confluence, because you have previous resistance levels here, you have support here, and then you have the market make that retest. So this is actually a confluence and also an indication to execute buy trades. So you see how confident, or how your confidence levels are built when you're trading from key levels. Now, currently on gold, we're not seeing any trend. I'm not seeing any clear trend on gold. I'm not going to call this an uptrend yet, because first we are on the lower time frames. If I go to the daily time frame right now, just zoom in a bit. So you see why I said I can't call it an uptrend, because if I go to the lower time frame, the higher time frames, the daily time frame, you would see that this is still a bearish momentum candlestick, right? You can see this massive rejection from this previous resistance. You can see the follow-up is bearish, and the market is trading within the highs and the lows of 1925, 1915. So gold is not giving any clear indication of its next direction. So we're just going to be very observant on gold at the moment, because I am not seeing any clear indication to either buy or sell right now. But obviously, if we get a break below this support trend line, or we get a retest at any of these levels, let me indicate for you guys. So if we get a break below this support trend line and probably a retest at these zones, then we can start looking for sell opportunities to trade go to the downside. Okay, so that's something that you can also look out for on gold. And if you want to trade gold to the top side, then you'd you'd look out for a break above 1945, 1950. So if gold successfully breaks above this resistance that it has created here, then we can start bracing up for you know, getting ready to long gold. I think all the way to 1984. So I hope you understand the gold analysis. I think somebody asked for gold. So right now we're not seeing any clear trend on gold. We're not going to say gold is trending up or trending down. On the daily time frame, we're seeing a rejection to the downside and a follow-up bearish momentum candlestick, right? And if you go lower, you'd see that we have strong support trend line here, which we want gold to break and sustain that break before we start to trade gold to the downside. And we also have strong resistance up here as well, which we want gold to break and trade gold to the upside. So that's what you'll be looking out for on gold. But yeah, remember, key levels are very important, guys. Very important. Because the market likes to move in a magnet, or like a magnet rather. So as it moves, you already have your key levels where you want the market, where you expect the market to react to. You have your key levels here. If it moves to the top side, then we're headed for this level. If we break above that, then the next place we're coming to is here. And if we continue to break above that, then we're just going back to make a retest at these highs that were created in May. So you want the market to act and then you trade in the direction of the markets. You don't want to try to be ahead of the markets. Except you're trading $6 trillion. All right, guys. We are at the Q&A session. So if you have questions that you want to ask me, you can go ahead and ask these questions in the comments. I'm looking at the comments to see if you guys have questions, and I'll make sure to answer all of them. Let me know in the comments, guys, if you have questions. Ranging for now between 1930 to 1908. That's gold. Gold will go down for sure. Well, it's the expectation for gold to go down because we are seeing the dollar gain more strength. But remember, we have a trend line that we want gold to break before we get that confidence. Can you check USDJPY? Okay. USJPY here. I believe you guys can still hear me. Okay. Take all this off. So we're going to try to identify support and resistance levels on the daily time frame, and as we go lower, we'll also check to see other key levels in the dollar yen market. And remember, with key levels, you don't necessarily have to force them to be there. You can just look at the market and try to spot your support and resistance levels. And if you don't see them, then you don't have to like force them to be there. Okay. You just focus on the ones that you can easily spot, just like I did right now. And then you can start to look in between and identify some minor levels. All right. So if, excuse me. So if you recall, with our analysis on the dollar index, remember I told you when you're trading major pairs, pairs that are or currencies that are paired with the US dollar, then you want to pay attention to the dollar index, because major pairs like USD for example, and NZD GBP they react according to the dollar. So if the dollar is strong, then it's also going to play out on USD NZD GBP most of the time. Okay. Now we're seeing that the dollar has been strong for quite a while now, and the USJPY market has been trending upwards, creating series of higher highs and higher lows, and it has finally made a retest at these highs that were created last year, October, with quite how many pips are we looking at here? We still have about 350 pips to the top side to make a retest at its yearly highs, which is 151 point. Let's just call that 151.9. Let me indicate that for you guys as well. 0.9. Now we can see the market is reacting to a key level, right? So if you want to go long on USDJPY, I mean, we're coming from a very strong uptrend. We've made a retest at this previous resistance or this previous pullback here. We have major resistance at the top, which I believe the dollar yen is going to make a retest at in the coming weeks, as long as the dollar remains strong. Then if you want to go long on USDJPY, we have to see a breakout of this level, right? 148.5. I should also indicate that for you guys. We want to see the market trade above these levels before we can start to look for more buying opportunities. We have 350 pips to this. I think we should take this down a bit, right? Because that's not a candlestick. This is a wick, and most times the markets makes a retest at wicks. They just close at half of the week and not really get to the top side. So we'll be focusing on 1.151.17. And that would be about 300 pips. Yeah, so if you want to take advantage of that, we want to see the dollar yen trade above 148.5, and then we can start to look for more buying opportunities to the top side. Because if we successfully break above here, if we successfully break above this point and get a nice retest, then we start to look for buying opportunities to the top side. That's what we want to look for on the dollar yen. If you're choosing to go long, okay, this is not necessarily a great spot to go long because your stop loss would be set at about 200 pips, right? And this is a key level that the market is reacting to. So we could get pullbacks to the downside, just like we did here. Pullbacks to the downside. You can see areas like here where the market made a retest, pull back before it continued to the top side. It also pulled back here, right, before it continued to the top side. Okay, so the market is reacting to a key level. You want to give the market room, see if it's going to pull back, and then we can start to look for buying opportunities in areas like here, because then the market will be reacting to the previous support. If it breaks below that, we can also look for buying opportunities here. And if we break below this point, then we can start to brace up for bearish momentum on the pound, on the dollar yen rather, because that would also be a break below the 200 period moving average. And if the market sustains that, then we're heading down to this point. Okay, so these are levels where you want to look for buying opportunities on the dollar yen, and also a break above this level. Okay, buying opportunities. But if the market breaks below this level as well, then the 200 period moving average is going to serve as support at areas like here. So if it serves as support and the market breaks below that, then we're bracing up for downside to 137.9 levels. So let me know if you understood. I think that was Hope that asked. Let me know if you understood. Okay, no, that's not Hope. Someone asked for, I think that's Wycliffe, yeah. USDJPY. Let me know if you understood. All right, everyone, we've come to the end of the live trading session today. If you have questions that I didn't get to answer, you can also go ahead and type in the chat. I'll answer your questions in the next live trading session, which is going to be next week on the 28th. I'll see you guys. Thank you for participating, and I'll see you guys next time.